What's going on, y'all? Welcome to another edition of Friday Wrap Up with yours truly, Kevin Weedmark, where every Friday I want to bring to you a brief overview of what happened this past week. I want to make sure that whether we're showing open houses, whether we're taking clients out showing houses, or whether we just bump into a friend, a relative, or somebody at the store, we have talking points for what happened this past week. So let's just dive right in. And the big thing that we saw is the market closed yesterday. We had non-farm payrolls that actually blew away their number. And what happened was interest rates ended at their highest points that we have seen in over a year. Not really good on the front from an interest rate perspective, but as I gave in my outlook, I really thought that this Q1 is going to be bumpy, and we are already off to the races. We also saw the 10-year Treasury close around, 4.76. That's one of the highest levels since October 2023, where we saw those record highs, where we saw in the newspaper, interest rates are at 2-decade highs. We're getting very close to that number, which is right around 5% on the 10-year Treasury. And once again, I wouldn't be surprised if we actually hit it. With all the talk of inflation, we had some inflationary numbers come out this week. And while they didn't blow anything away, they indicated once again that inflation is still relevant. We did have one of the Fed chair members, Fed Waller, come out and indicate that he believes we will see more rate cuts than 2. But again, I believe that is not going to happen until May. We have a long road ahead. We have at least 2 Fed meetings where they don't do anything. We have an incoming administration on the 20th, which is going to be not this coming week, but the following week. And then we're going to have another Fed funds meeting by the end of this month, just by the end of this month. So we have a lot going on. The unemployment rate did drop, however, to 4.1%, and inflation is still on everybody's mind. The big thing that really people need to understand is why interest rates went up, because if we have a healthy labor market, we have inflation, long-term inflation that we believe is running still a little bit hot, the Fed's not going to do a damn thing. The Fed is not going to decrease interest rates in that environment. And that's the fear of traders. The traders are trying to figure out, when is the Fed going to reduce the Fed funds rate again? When are things going to look a little bit better in their eyes? And when do they feel that they're going to have inflation under control? And the answer is they don't know, right? They have no idea. So right now, to me, the Fed is a non-issue. The Fed is a non-player. They can say anything they want. And obviously, as we saw this week, they affect the market a little bit. But in the long run, the economy is just going to have to play itself out. You're going to have to get this new administration to come in. We're going to have to see what executive orders actually get implemented. And we're going to have to see the attack against the federal deficit, as well as our energy independence. Those, to me, are going to be the biggest drivers of where we end up at the second half of 2025. All right, y'all. Everyone have a great weekend. And don't forget those buy downs. I actually gave out a couple quotes yesterday for buy downs for people that are potentially selling their homes. They're still a great tool. There's a great way to market it with a flyer, talking about seller concessions, talking about buying down the rate, still having some money going towards closing costs. It is a very attractive offer for a buyer. So if you need anything, you need a call, just give me a call, shoot me a text, shoot me an email. I am always working as always. I wish you happy selling this week, and I'll be back at you on Monday with our weekly update. Until then, everyone have a great weekend. Like I said, cheers.